Hello, everybody. Welcome to my overview of bonds payable. So I know this is going to seem like a lot, but we have a lot to cover and we're going to have a lot of different topics. So just to kind of this particular front end summary is really going to be talking about debt financing versus equity financing. The next video will be on present value. The one after that will be covering present value, essentially like an annuity. The fourth one or the third one will be calling how does a bond work? Okay. And also we're going to be looking at an overview of the stated rate of interest versus the market rate of interest and the impact on value. What we're then going to go through and do is using present value tables, we're going to go through and cover a multitude of different types of bond problems. The great thing is there's a limited universe in terms of what we can go through and ask. And so I'll be trying to cover everything which is in that limited universe. We'll then go into, after we discuss about how a bond is valued, we'll then going through and figuring out how bond interest amortization works. And how do we pay interest? How do we determine the bond's carrying value as of a particular date? What we're then going to go through and do is we're going to then learn about the effective interest method of amortization, and we'll go through and explore that topic as well. But let's first talk a little bit about bonds. As we've gone down the balance sheet, we've covered property, plant, and equipment. We've covered accounts receivable. We've covered inventory. So we've kind of gone through and covered most of the assets, but now we're getting to the other side of the balance sheet, or the assets are equal to our liabilities plus our owner's equity. So when we're looking at debt versus equity financing, like how do I want to grow my operations? So I might have no choice, but in the corporate world of finance, we really have two choices. The first choice we can go through and use is use equity financing. What does that mean? It means we sell stock. However, the important thing to know about this of selling stock is we are going to be diluting. So if I own 50% of something that's worth 100,000, or if I own 100% of something that's worth 100,000, I sell 100,000 worth of stock. Now I only own 50% of that greater entity. However, when it comes to actually maintaining control of your ownership, there's a lot of different ways we can go through and work through this. So for example, Mark Zuckerberg, as it stands right now, and this is in April of 2022, will never be voted out of Meta platforms. And it's because there's two different forms of stock. There's a Class A share, there's a Class B share. The Class B shares have superior voting rights. He sold Class A shares publicly, I believe it was back in 2012, but he's kept the Class B shares to himself. Therefore, he dictates what goes on with that company. So if you're an entrepreneur, it's very, very important to have control. Now, the benefit of equity financing is it does not have to be repaid. It's an investment into the company. So that's one of the positives about equity financing. So if I sell stock, that's one way I can raise money. The other way we can raise money is by debt financing. We can borrow money, or we can issue what we call a bond payable, which is like an interest-only loan. The disadvantage with debt financing, though, unlike equity, is it has to be repaid. We also have to have interest. We're also going to be paying interest. Also, debt financing can also be convertible, meaning that if the investor likes what's happening with the stock, they can go through and convert their debt into equity. Now, just in terms of an overview, debt has priority in bankruptcy. There's no dilution, right? It has to be repaid. But the one thing is that if you try to go today to get money from the bank, you're going to want to go through and start that banking relationship early. Also, just remember, if you are a brand new business, it can be much more difficult to go through and to get a loan. On the equity side, the downside with equity is that the liabilities get paid first. So if there's a bankruptcy, the debt's going to get paid first, then the equity. The dilution, as I was mentioning before, is that if I own 100% of 100, I then sell another 100 of stock, but now I own a smaller piece of a bigger pie. Equity does not have to be repaid, and it's always better to look for money when you don't need the money. Also, something very important with equity is you have to be very careful about where you are selling the stock. And that's why if you're going to be selling a lot of stock, you need to be in Delaware. Okay, not because Sleepy Joe's from there. Sorry, I just can't help it. You got bird poop on you. It's crazy. But in any event, you want to be in Delaware. And Delaware has the most favorable corporate laws out there. So it's something that you really want to make sure that you are in the state of Delaware when it comes to equity fundraising. Okay, so most important thing is you always want to make sure you know who you are doing business with when you're seeking an investment, if you're borrowing money or receiving an investment. I cannot tell you how many times in my career I have seen it, but if you are going to be a CFO, if you're going to be a business owner, you have to know who you are doing business with. And the reason is because when it comes to lenders and to investors, they can become extremely predatory, because if you are desperate for cash, all you're looking at is the money, not who's behind the money. So just keep that in mind as you're going through and raising debt or equity. Now, one of the things you're going to need for this lesson, I'm going to put some links in the basically in the comments below, is you're going to need a present value table. You're going to need two of them. The first one is going to be a present value of a dollar table, and then you're going to need a present value of an ordinary annuity table. And I'm going to go ahead and show, I'll give you guys some links to that. You can easily find them on YouTube. But in any event, I want to thank you for joining me here today. Please leave any kind of questions you might have below, and I appreciate your liking and subscribing to this video.